Welcome back to the deep dive. Today we're going to dive into REITs as an investment strategy.
Yeah.
And we're actually looking at excerpts from a guide that's called The Student's Guide to REITs.
Interesting.
But don't let that title fool ya.
Okay.
The information here is really valuable for investors at any stage.
Right.
And that's kind of what we want to do today, is really kind of extract the most valuable nuggets here.
Okay.
To help everyone listening understand REITs and their potential.
Well, and what's really interesting about REITs is that they offer a way to tap into real estate without, needing a lot of capital or having to deal with the headaches of owning properties directly. It's like having access to these diversified, professionally managed real estate portfolios that you would normally need, millions of dollars to build on your own.
So it's almost like having a team of real estate experts working for you.
Exactly.
That's kind of cool.
Yeah.
So let's break this down a little bit.
Yeah.
What exactly are REITs?
So a REIT, or a real estate investment trust, is basically a company that owns and operates or finances income-producing real estate.
Okay.
And they pool money from investors to purchase and manage a variety of different properties.
So instead of me going out and buying like an entire office building,
right,
I could buy a tiny piece of maybe like lots of different office buildings or shopping malls or apartment complexes.
Yeah.
Through a REIT.
Exactly. And that diversification is one of the key advantages of REITs.
Okay.
Interesting.
Now, it is important to remember that there are different types of REITs.
Okay.
The most common type is called an equity REIT.
Okay.
And these REITs generate their income primarily from rent.
Okay.
And they own things like apartment complexes, shopping malls, office buildings.
Okay, so equity REITs are like being a landlord.
Yes.
But without all the work.
Exactly.
I like that.
Yeah.
So what are the other types then?
So we also have mortgage REITs, or MREITs.
Okay.
And they focus on investing in mortgages or mortgage-backed securities. So they make their money mainly from the interest on those loans.
Okay.
And then there are also hybrid REITs,
What?
which combine both approaches. So they own properties and they invest in mortgages.
Got it.
Yeah.
So it's kind of like choosing your level of involvement in the real estate market.
Exactly.
But I've heard a lot about like public REITs versus private REITs.
Yes.
What's the difference?
So publicly traded REITs are listed on stock exchanges.
Okay.
Which means that they're really easy to buy and sell, just like any other stock.
Okay.
And this provides really good liquidity, meaning you can convert them back to cash really easily.
Okay.
Private REITs, on the other hand, are not traded on public exchanges.
Okay.
And so they're much less accessible and less liquid.
Got it.
And they often have higher minimum investment requirements as well.
So for somebody who's maybe just starting out,
Yeah.
publicly traded REITs might be the easier way to go.
Yeah, exactly.
But why even invest in REITs in the first place?
Right.
Why not just go for like traditional stocks or bonds?
Right. So REITs offer some really unique benefits
Okay.
that make them attractive to all kinds of investors.
Okay.
Our source material highlighted several benefits,
Okay.
and these benefits apply to you whether you're a student or a seasoned investor.
Okay.
So let's start by talking about accessibility.
All right. So tell me a little bit more about why REITs are considered to be accessible.
Well, owning real estate directly requires a significant amount of money up front.
Right.
REITs, especially those that are publicly traded, lower that barrier to entry quite a bit.
Okay.
You can start investing with a relatively small amount, even as little as the price of a single share.
Wow.
And this really opens up the world of real estate to people who might not have the resources to buy properties directly.
So it's almost like REITs democratize real estate investing in a way.
Exactly.
Yeah. That's pretty cool.
Yeah.
What's the next big benefit?
So liquidity, as we touched on earlier, is another key advantage.
Okay.
You can buy and sell publicly traded REITs really easily. So you're not stuck in a long, complicated process if you need to get your money out.
Yeah, that's a big plus, especially compared to like the illiquidity of an actual physical property.
Right, exactly.
Yeah. Okay, what else makes REITs stand out?
So diversification is a major advantage.
Okay.
REITs can give you exposure to a lot of different real estate sectors,
Okay.
like residential, commercial, industrial. And this really helps to reduce your risk compared to owning a single property.
Right.
You can even find REITs that specialize in specific types of properties like healthcare facilities or data centers.
So I could like get exposure to, let's say, the self-storage market,
Yeah.
which is kind of booming right now,
Right?
without having to like build or manage a storage facility myself.
Exactly. It's a way to participate in these really niche real estate markets without getting your hands dirty.
I like that. Okay, so accessibility, liquidity, diversification. And Let's not forget about that passive income.
Yeah, passive income.
Everybody loves passive income.
Exactly.
So tell me about that.
So REITs are actually legally required to distribute at least 90% of their taxable income to shareholders as dividends.
Okay.
So this means that just by owning shares in a REIT, you could potentially receive these regular dividend payments.
That's a really good reason to consider REITs.
Yeah.
But wouldn't it be a hassle to manage all those properties?
Not at all. That's another benefit of REITs professional management.
Okay.
So when you invest in a REIT, you're basically hiring a team of experienced real estate professionals to handle everything.
Okay.
From acquiring the properties and managing the tenants to keeping up with building maintenance.
It's like having a personal property management team.
Yeah.
Without the overhead.
Exactly.
That's really cool. Okay, so we've got accessibility, liquidity diversification, passive income, professional management, and our source material also mentioned some potential tax advantages.
Yes.
So can you tell me a little bit more about those?
Sure. It's always best to talk to a tax advisor.
Right, of course.
To get specific guidance. But it's worth noting that some REIT dividends might qualify for reduced tax rates.
Oh, wow.
Or even deductions.
Okay.
So this could be another potential benefit for investors.
So we've got accessibility, liquidity, diversification, passive income, professional management, and potential tax advantages.
That's right.
That's quite a list.
Yeah.
It sounds like REITs could be a great option for anyone who's looking to add real estate to their portfolio.
Exactly.
But before we get too excited, are there any downsides?
Yes.
Or like things to consider before jumping into REITs?
Absolutely. No investment is without risk.
Right.
And REITs are no exception.
Okay, so give me the cautionary tale here.
Okay.
What are some of the potential pitfalls that investors should be aware of?
Well, one thing to keep in mind is that real estate values can go up and down.
Right.
Just like any other market.
Yeah.
REITs are tied to the performance of the real estate market, so their prices can fluctuate.
Okay, that makes sense.
Yeah.
You know, it's important to remember that no investment is a guaranteed win. So what else should we be thinking about?
Even though REITs are required to distribute most of their income as dividends, those payments aren't actually guaranteed.
Oh, yeah.
So if a REIT's earnings decline, those dividends could be reduced or even eliminated.
So it's not just a constant stream of passive income no matter what.
Right.
Okay, got it.
Yeah.
What other factors should investors be considering?
Due diligence is really important with any investment.
Okay.
And REITs are no exception.
Right.
You really want to research REITs that have strong track records.
Right.
Understand the fees that are associated with them and pay close attention to what's happening in the market.
So we can't just like throw darts at a board and pick a REIT and hope for the best.
Right.
So what does a solid due diligence process look like for REITs?
It involves looking at the financials of a REIT,
Right.
understanding the types of properties that they own, and really assessing, how good their management team is.
Okay.
You want to see a REIT that has performed well consistently.
Right.
That has a diversified portfolio.
Okay.
And that is a really clear strategy for how they're going to navigate the ups and downs of the market.
So some serious research involved.
Yeah.
Are there any like resources or tools that investors can use to help them kind of evaluate REITs?
Yeah, absolutely.
Okay.
A lot of financial websites and investment platforms have really detailed information on REITs, including their financial reports, their property holdings, and even profiles of their management teams.
So there's no shortage of information out there if people are willing to do a little bit of digging.
Exactly.
Okay, cool. So what about the actual steps of investing in REITs?
Okay.
Well, where does somebody even begin?
So the first thing you want to do is figure out your budget.
Okay.
How much money do you feel comfortable putting into REITs?
Right.
And it's always a good idea to start small.
Okay.
And then gradually increase your investment as you become more experienced.
So don't go betting the farm right away.
Right, exactly.
Okay, what's the next step?
So you really want to consider what your investment goals are and how much risk you're comfortable taking. And then you want to choose the type of REIT that really aligns with that.
So equity mortgage hybrid.
Exactly.
I got to pick my flavor.
Yeah, pick your flavor.
Okay, so then what?
So next you'll need to open a brokerage account.
Okay.
This is basically your gateway to the stock market, where you can buy and sell publicly traded REITs.
Okay.
And there are tons of online platforms available. A lot of them have very low fees or even no fees.
Okay.
So they're really accessible to pretty much anyone.
So I've got my brokerage account. What happens next?
Then it's time to really put your researcher hat on.
Okay.
And start looking at specific REITs that you might be interested in investing in.
Okay.
Look at how they've performed historically.
Okay.
What their dividend yields are. What kind of properties they own.
Right. And
the track record of their management team.
So it's like I'm scouting out the best real estate deals.
Yeah.
But I'm doing it all online.
Exactly.
I like that. So is there a way for me to diversify my REIT investments even further?
Yeah, definitely. You can invest in a bunch of different REITs to spread your risk across different property types and sectors. Or you can even consider investing in a REIT ETF.
Okay, so back up for a second. What's a REIT ETF?
A REIT ETF is basically a basket of different REITs all bundled together. So you get instant diversification without having to research and buy all those individual REITs yourself.
So it's kind of like a one-stop shop for REIT exposure.
Exactly.
Okay, I like that.
Yeah.
But whether I go with individual REITs or an ETF, I should still probably start small, right?
Yes. Definitely start small, especially if you're new to REITs.
Okay, what about those dividends that we talked about earlier?
Right.
How should investors be managing those?
So a lot of people like to reinvest their dividends. You basically take those dividends and you put them right back into your REIT holdings.
Okay.
And that allows you to really take advantage of compounding, which means your investments are going to grow faster over time.
So it's like a snowball effect.
Yeah.
But with dividends instead of snow.
Exactly.
Okay, cool. Any final thoughts for investors who might be considering, dipping their toes into the world of REITs?
Yeah, so REITs can be a great addition to a diversified portfolio.
Okay.
But it's important to remember that the real estate market moves in cycles.
Right.
And it's influenced by a lot of different things. Interest rates, economic conditions, all kinds of things. Okay. So staying informed about what's going on, keeping an eye on your investments, and being willing to adjust your strategy as needed. Okay. Those are all really important for long-term success.
So knowledge and flexibility are key.
Exactly.
I like that. All right. Well, this has been super insightful. I feel a lot more confident about exploring REITs as an investment option.
I'm glad to hear that.
And, it's interesting because even though our source material was geared towards students, we've really talked about how the principles and the strategies apply to investors of all ages and experience levels.
Exactly.
So we've kind of debunked the myth that REITs are just for students.
Right.
They can be a really valuable tool for anyone who wants to build wealth through real estate, no matter where they are in their investment journey.
Exactly.
But before we wrap up this deep dive, I have one more question for you.
Yeah.
I'm kind of curious. We've covered the basics. We've talked about the benefits, the risks.
Yeah.
But as we kind of look ahead, what are some of the emerging trends or factors that you think are going to shape the future of REIT investing?
Well, that's a really good question.
Yeah.
One of the things that's really interesting to me is the rise of e-commerce.
Okay.
And how that's affecting these traditional retail properties. As more people shop online REITs that own shopping malls or those brick and mortar stores, they face some big challenges.
Yeah, it seems like adaptability is key for REITs to really thrive.
Yeah. Definitely.
In this changing market.
Yeah.
Are there any specific sectors or types of properties that you see as particularly promising for the future?
Well, I think industrial REITs, especially those that own warehouses and those logistics facilities, they're in a good position to benefit from the growth of e-commerce. Because everybody needs efficient supply chains.
Makes sense.
And then data centers are another interesting area. Because the demand for data storage and processing just keeps growing and growing.
Right. And it's really fascinating to see how technology is shaping the real estate world.
Absolutely.
And how that in turn is impacting REIT investments.
Yeah, for sure.
Any other trends or factors on your radar?
I think the rise of remote work is a big one. It has big implications for those REITs that focus on office buildings because, as companies get used to these more flexible work arrangements, the demand for that traditional office space might change. And these REITs are going to have to rethink their strategies.
So it's not just about understanding where the market is today, but also anticipating what might happen in the future.
Exactly.
And how that's going to impact REIT performance.
Yeah.
All right. Well, any final words of wisdom for our listeners who might be considering adding REITs to their portfolios?
Yeah. I mean, REITs can be a really valuable asset class,
Okay.
but you have to approach them strategically.
Mm-hmm.
Diversification is really important.
Right.
Thorough research is really important. And having a long-term perspective.
Okay.
Those are all crucial for success in the REIT market.
All right. So this is a marathon, not a sprint.
Exactly.
I like that. All right. Well, we've learned a lot today about REITs. We've talked about everything from the basics to the benefits to the risks. We've talked about how REITs can offer a really unique way for people to participate in the real estate market.
Right.
But just like running a marathon, it takes preparation.
Yeah.
It takes patience.
Yeah.
And it takes, the willingness to maybe adjust your approach along the way.
Absolutely.
We've debunked the myth that REITs are only for students.
That's right.
And we've uncovered some valuable insights for investors of all levels.
That's great.
Well, it's been a pleasure diving deep into the world of REITs with you.
Yeah, likewise.
And to all of our listeners out there, we encourage you to keep exploring. Stay curious and never stop learning.
Absolutely.
Until next time, happy investing.